right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Yes, good morning, everybody. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, however, good or bad, it's not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please open an account today. Would you do that just out of loyalty and respect? Sure hope so. I do these sessions to help you become a success, so hopefully you pay it back by opening an account at TradersWay.com. Do these sessions 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street for premium members, where I'm also Forex Speaker of the Year. Oh, is that right, Mr. T? Right on. Appreciate that, Mr. T. Opening up a live account, getting his documents verified. That's cool. Thank you for your loyalty. All right. I thought I would start at Forex.Today. You know, the main power of the website is that you can create your own trade plans so that you can act and then one day be a professional Forex trader. So I like looking through the posts, and Dalmas made a beautiful one this morning right here on the Kiwi. He was talking about how the economy is at full employment but stuck in low inflation, talked about what the head of the central bank is just talking about, and he's talking about Japanese news going on in here, so on and so forth. Like, really well thought out. He has a buy order and a stop loss in here. Very, very nice. And then look at the charts. It's got a 4-hour chart here and a resistance zone and a trend line. The 4-hour, here's the 15-minute for each of those zones. Here's where we're caught here on the daily. Just very well thought out, nicely written. Thought that was really good, so I'm going to give this a like, because that takes work. So I liked it. You know what? I'll even leave a comment, because I'm like that. Great post. Excellent job. See how long that took me? So I hope you take the opportunity to make posts in similar fashion. And if you read them, if it only takes, what was that, 5 seconds, it's a shame. You know, so you should read a post as well, think about it, and leave comments. Why not? It takes less than 5 seconds. But there's some really nice posts up there today. So thank you for your participation, guys. And who did this? That is not a trade plan. Sorry. Okay, so let's move on.com. Where should we start? S&P 500, I suppose. Once again, going back a few days ago, this red zone, even though it's on the green zone, this red zone is the 21 EMA, I believe, on the daily. And we were hoping that, even though at the time it didn't look like higher highs, at least maybe it would create no lower lows. Okay. And now we do have a bit of a higher high. So that's really nice. I don't know how you want to draw it, but, you know, something like that maybe. Or at the very least, right? Something like that, at the very least. Oops. Perhaps. I like it over here. Shows the higher high. Right? So maybe we can continue that or even accelerate to the upside. But if you want risk on, you want the stock market to go up. Okay? So a bullish engulfing candle, if you think of these as dailies, you know, if this is yesterday's high and this is yesterday's low, then we have a nice bullish candle here making a higher high, kicking off of the bottom here, right? So big red candle, big red candle, big green candle, sort of sideways, green candle. So that could be good if you want risk on, right? Hopefully you remember doing this analysis. So that's part of the risk on. How about our friend Euro Yen? Now that is a tight range, huh? Kind of makes it look like no one's buying yen, or I mean euro, and they're not really buying yen. So based on this, if you're trading a euro pair or a yen pair, really what's happening is the other currency on the pair is the one that's moving it, really. Euro and yen are quite neutral. Beautifully neutral, huh? Just incredibly neutral. You can see we've lost the volume and volatility of July. It just kind of crashed around August, and we've just been moving sideways for the month of August. But that's pretty typical. The question is, are you thinking about the future or are you looking at the past? And if you're thinking about the future, you're making decisions now because you do anticipate volume and volatility to pick back up in the month of September. So are you going to resume selling this, or are you going to buy dips? Okay, and that's the kind of questions you should be asking yourself now, not after it's happened, right? Looking at another yen pair. Seems double bottomish. Okay. The thing is, do you believe it's rolling over? Right? We have a bottom trend line here and an upper trend line there. Looks like a little more up than down. Now, putting it in the context of a double bottom, that could be interesting. Also, putting it in the context of this is the third week of the year, or third week of the month of August, it could be extraordinarily interesting, right? FX Ambassador says, what's the take on the Kiwi? You know, I'm a pretty simple trader in that sense. Right now, commodities are not amazingly strong. So I put Kiwi in the commodity basket. And so you're looking at risk on or risk off. And on risk on days, Kiwi yen's going to go up. And we've been at a floor now at 72 or 73 for a long time. So, you know, and there's a stochastic move upward on the Kiwi yen daily. So it's sort of like if you're a bull, you're already buying it. Right? So what's my take? I don't know. If you're bullish, you've probably been buying dips and moving stops. And if you're a bear, you know, yeah, you're looking at your spots, but right? No, but Miles, you just do your job. If you're a bull, you buy a dip, move your stop, and then you need to decide: do you let it run, or do you take your a smaller, quick profit? So, like pound yen, we're looking at it right now. If you're a bull, you had an opportunity to play this double bottom going back to a while ago, right? 6 weeks ago. So if you're a bull, you would have played the double bottom. Excuse me. As somebody here did, double bottom of a double bottom. And then the higher high, higher low scenario, right? So if you're a bull, there's just no way you miss that. Because that's what you're looking for, right? The double bottom, the higher high, the higher low. So you would have bought that, followed by a higher high. And the disappointment, and that's pretty typical this time of year where you get full retracements back. But that's why I say, you know, buy, move your stop closer to break even. And how many times have you heard me say that? In the month of August, don't even try to make money. Acknowledge to yourself that you're not going to make any money. You're not even going to try, right? You buy, move your stop to break even, and go find another trade. And if you get lucky, these trades stick. Okay. That's all. You got to do that over and over again. And this is particularly important, you know, near the end of August, that you do something like that. But again, that has to be your strategy. Miles says, last week of August, we should start. Well, that's what I was teaching you in January and February and March and April and May and June. And I probably mentioned it in July. Yeah, right. So, yeah, so it's whether you're doing it or not, right? So, you know, I wouldn't expect anything major to happen. Um, you know, the big event for the yen is not until September 20th. And don't be disappointed that it may be disappointing. nonetheless, you do your job. It's one of these things, if you do your job and other people do their jobs, things can work out very well. Meaning you just might have 5 or 6 or 7 or 10 or 20, depending on how much you trade and how aggressively you allow your trades to stay open. But by now, in September 20th, let's say you end up having 10 trades open. And they're probably up 1 or 2 or 300 pips each, and you're probably having a fantastic month. And you're like, oh my gosh, Wayne is totally right. Not only have I had my first 1,000 pip month, but I'm up, 2,000 pips for the month. Right? You're like, my gosh, he's totally right. And then the Bank of Japan makes a huge announcement, September 20th, that they might probably think about doing something soon based on their little study. I mean, really, seriously, what do they have to study, right? But anyways, so September 20th, an event happens, and it weakens the yen, and now you're up, 8,000 pips, and you're just like, holy crap. You just had no idea that was even possible. And I'll say, yeah, it's because you never tried. Right? So anyways, looking at this Kiwi yen on a 1 hour, it doesn't look like much is happening, right? So you just simply do what we always do. Identify your levels, right? Support, 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 support. Right? And every one of these little dips, no matter how painful and disappointing it is, you buy them and move your stop to break even. And I told you, be okay. Just be completely emotionally okay with breaking even 60 times in a row. So and yes, it looks dead, right? Until one day you wake up and you're like, oh my God, we're at 76. Okay? So the proper way to trade, and I know you've heard it a million times, but I'd be remiss not to mention it another million times, is not looking at your charts and figuring out what the trade is. You've already lost. If not today, tomorrow, or even worse, it'll take you 5 years to figure out that you've lost. The way to trade is decide whether you're a bull or a bear. And to trade that. And if you're correct on direction, which means your strategy is right, then in the long run, you will have more profitable trades that are larger individually than your losses. Right? Let's say 62% of your trades are winners. But let's say your average loss on the Kiwi yen is 100 pips, but your average win on the Kiwi yen is 300 pips. Then you're smoking hot, right? Look at your stats. If your winners and losers are nearly the same, you're losing. Okay? Because then you're going to rely on being 80 or 90% right, and that's just ridiculous. You can get it if you cheat, which is also ridiculous. So you need to practice the proper type of trading, right? Right? And also you can skip scalp and spot and all those things. But remember, if you're only making 25 pips at a time, you're not going to get filthy stinking rich. And if that's what you would like to do, meaning get filthy stinking rich, then you need to add to your strategies. Spot and scalping and stuff like that, trades where you're making 10 to 50 pips, those are income producing trades, which are fine. You got to eat every day, but it doesn't build wealth. Right? It's kind of like shoveling snow off people's sidewalks. It's a lot of work. It's very difficult, takes a lot of energy, and it doesn't pay very much, but it puts food on the table, right? Our unrealized wins end at break even, but our realized losses end as stable. Oh, well, it's because you didn't get your strategy right, Miles. So if you acknowledge, Miles, that let's say the month of August, and you know it's probably not the beginning of August, it's probably the end of August, but let's say you in August you say, in the month of August, I am going to make 0% return. Well, on the course of a year where you have, 3%, 1%, 1%, 2%, 1%, 1%, 3%, whatever. And if you get to like in August, so January, February, March, April, May, June, July, oh, good. In August, 0%. In September is 2%, right? If your results are like that, and your investor looks and say, wow, you didn't make any money in August. And you say, yeah, that's traditionally our month with the lowest volume and volatility. Does that look bad? No. In fact, it's understandable. But even let's say it was May, you'll just say, yeah, that was a bad month. Okay? But so your strategy could be like, you don't want to end up like -3 because you made a bunch of big trades and widened stops and took some losses and then nothing happened. But what ends up happening is if this whole process happens, so if the Bank of Japan does something, okay, this is kind of your bet, if you will, the cusp of your strategy. If you get a policy change at the Bank of Japan that weakens the yen, then what could happen is in August you might get 0, but September you might get 5. In October you get 6. In November 4, and December 2. Okay. And nobody really cares about the 0. And also, inevitably, what happens is the 0 you can explain as you're setting up your portfolio for the second half. Yeah. Good thing you didn't hear that. Holy smokes. Hate those coughs that come right from your lungs, huh? So generally, as I've mentioned before, August is a building month. And while everyone else is crying about no volume and no volatility, you're setting up your portfolio for the rest of the year. Okay? So, yeah, these dips, you do need to have a strategy. And that's what I mean. Like, if you're looking at your charts for advice, if you want your charts to tell you to do something, you're not going to see anything here, right? And then one day, you'll look at your charts and find out the Kiwi's way up here. It happened quite slowly. And then you're like, oh man, if I had only bought it at 72, I'd be up 350 pips. Right? And then Bank of Japan intervenes, and all of a sudden we're up here, and you're like, oh man, I should be up 650 pips. Yeah. And then you say, wow, and if I had got into 5 other more trades, you know. So anyways, you need to have a strategy. Yes, Fred. I never, ever, 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 ever recommend sitting on a losing position. Okay? So if you spent the entire month of August, for example, with a strategy in mind, and the strategy is what, I guess the strategy has to answer the question, what will happen to the Japanese yen between now and the end of the year? Will it remain strong or will it weaken? Okay? And if you believe it'll weaken, then you need to trade that. If you believe it'll strengthen, then you need to trade that. And your answer is, to me, is not even really that important. Because with your strategy, you will be entering your trades in properly. And if it turns bullish, if the yen gets stronger, and you believe the yen will weaken by the end of the year, then you probably won't get a lot of trades. They won't even set up properly. So, for example, if you believe the yen pairs are going to go up, there won't be too many opportunities to buy its support in an uptrend if the yen pairs are falling. Right? Do you understand? You only buy its support, and ideally in a scenario of higher highs and higher lows. But if the USD yen is dropping from 100 all the way down to 90, you're just not going to get any setups. And you're like, man, I thought we were on our way to 110. Turns out we're on our way to 90. Well, yeah, then you probably didn't get a lot of trades. And then, so then what happens is the rest of your year ends very modestly, and you have a modest year. You only make 10% return. Okay? But if it goes right, you make a 40% return. Yeah, 1% per week is fine, Fred. I'm okay with that. My sort of area is if I make more than 5% in a month, I better have a very logical and intelligent reason why 5% was made for the month. Because more than that is a little bit of a red flag. Because remember, return is a function of risk. If you have a big return, a professional investor is going to look at it and say, wow, you probably took some undue risk. And I'll say, well, actually, let me point out the month or two before we had almost no return. And that's because we were building up positions in advance. And it wasn't until we got the changes in central bank policy that these investments really pay off. So really, if this 10% return in October looks like I might have taken more risk, it's actually you have to average it out over the course of 3 months. Because we set those up in August, they took off in late September, we took our profits in October. So really look at that 10% month spread over 90 days, we're really right back in our target of 3 to 5%. And they'll say, oh, wow, that totally makes sense. And I'll say, yeah, I know. It's because I'm ripper smart. Wicked smart, eh? Okay. So you have to get your nose around that one if you want. That if you got a 15% return for the month, an investor is going to look at that as unfavorable, or look at it unfavorably. And a lot of amateur traders don't get that. Just imagine handing an investor your track record of 4 years of trading Forex. And month after month after month after month, you make somewhere between 1 and 4%. During the good months, during the bad months, during the crazy volatility, during the lack of volatility, the stock market rally, the stock market crash, the Brexit, the this, the that, all these different things. And you're just very steady and calm and focused, and you constantly produce somewhere between 1 and 4%, just over and over and over again through all different market conditions. Do you understand that money will just pour into your coffers? You understand that? That's what the world is looking for. That you take on almost no risk, and you're like a machine. You pump out profits. But most importantly, a sophisticated investor can do some calculations and say, if I gave Michael this money, then at the end of the year, I'll have a certain amount of profit based on a certain amount of volatility in their portfolio, which has to fit in the volatility of my overall portfolio, and I can count on those returns. They don't want you to make a home run and get ungodly amounts of sum. They want to be able to calculate in advance how much risk you're taking and how much reward will come out the other side. They want you to be boring. But they want to be able to count on you. Right? Martingale's stupid. Janos. Absolutely, totally retarded. And those that are mentally challenged are, of course, insulted by this. So. The Janos, there's one variable or assumption that makes Martingale work. Do you know what that assumption is? Okay. That you have unlimited amounts of money. No joke. I mean, that's how the math works. So for those who don't know, okay, let's say you roll the dice. And it's a game. I don't know what the game is. So you have 2 die, right? More than, if it's 7 or more, you win. If it's 6 or less, you lose, whatever. So you roll the die. You either win or you lose, right? Oh, you know what it is? It's a flip of a coin. That's probably what I'm thinking of. Flip of the coin. All right? So let's say you need to flip the coin. Heads you win, tails you lose. So you put down some money, flip a coin, you lose. Okay? Could happen, 50-50 chance, right? So now, double or nothing. So you double your bet, flip the coin, you lose again. Double the bet once again, flip a coin, you lose again. Double your bet. Another time, double the double of the double. Flip a coin. You lose again. What are the odds you can flip a coin tails 6 or 7 times in a row? What are the odds? It started out 50-50. Okay? So the game here is that eventually you're going to hit heads and win. So, right? So you had $1,000 down, then you doubled that, and it was $2,000. Then you doubled that, then it was $4,000. You doubled that. It was $8,000. You doubled that. It's $16,000 now. If you had to double again, $32,000, right? And it goes on and on and on and on. And all of a sudden, boom, heads, you win. Back to break even. Good job. Yeah, the odds are still, well, sort of. You get in the idea of like the probability of flipping it 7 or 8 or 10 times in a row. But anyways, it's a really, really dumb idea to do that in trading. Right, Miles is starting. Yeah, so it only works, Miles, right? If you had all the unlimited amount of money, because eventually you will win, right? Because you have to keep doubling. So I'm pretty sure you don't have unlimited amounts of money. Also, just the idea that you're betting and not trading a strategy or a plan just is like guaranteed ruins. And I don't think you can build a career on something like that, right? Like I can't imagine you'd feel like you had a skill or even a purpose. Right? To me, I don't see how it'd be enjoyable. All right. So there's that. Yeah, Miles, the anti-martingale is move your stop to break even, find another trade. So let's take a look at Aussie here. Okay. Do you really want to hurt me? Do you really want to make me cry? Okay. So once again, what is your strategy? What do you want to do? You should already know. You can see here there was some sort of bottom-ish, and then it created sort of a top, and then it was a bottom again, then it was a top again, and then it almost caught that, and here we are now. Of course, if that doesn't hold, then we'll probably look at something down in here, right? So if you put it all together, it's really not that complicated. If you want this to go up, you're either going to do it here or you're going to do it down here, right? So that's what I'm saying. If you buy it and it drops, now you know to take a break. It's not like you're getting a lot of other opportunities. Maybe down in here, it then gives you another reversal pattern and you trade that. And if that fails, then again, you probably took a small loss or got kicked out at break even. And now you got to wait for the next level of support, right? And if your strategy was to buy Japanese yen because you believe the Bank of Japan can't do anything else, that they've run out of resources, right? That global macroeconomics are not going to improve in the second half, then you got a lot more trades set up for you, right? And so how do you get paid? Because you had the right strategy. You said yen strong. Global economics bad. That's it. That's the difference between winning and losing. No, Dan asks, do I trade commodity currencies against each other? Not if I can help it. Okay. Not intentionally anyways, right? So that, employing the right strategy and being lucky enough, let's say, or how about, because you based your strategy based on logic and intelligence and research and, that kind of stuff. And I suppose it's just not luck that it worked out your way, but I guess you were not unlucky for it to not work, right? I guess, depending on how you think. But if it goes as you planned, then simply having the right strategy is where you make your money. And then the technical analysis is pretty easy, right? So like I was saying, like if you were looking for it to reverse here because you saw this as support, and as I showed you, it was very obviously support. Now you don't know if it's actually support, you just know that that's an area in which you believe support could happen again because it was support in the past. So you're sitting there watching this, and then it double bottoms, and then gaps up. So you say, oh, I'll buy the retracement, right? And has it been working out tickety-boo since Monday? No. Okay. But you know it's early in the game. And you're playing the game. Now, is any of this on your charts right now? No, it's not on your charts. It's technical analysis doesn't necessarily predict the future. You have to do that. That's where you make your money. That's why I always pick on people that say, oh, well, I sold it because Stokes told me to. Oh, I sold it because MacD told me to. But of course, they're not telling you any of that. That's your job. Okay? So if you're a bear, let's just look at this. Okay, the weekly and monthly pivot clusters are certainly an area in which you could sell. And somebody did that. See that? Somebody actually did that. Now, another way, if you're a bull and you saw a double bottom on Friday and a gap open on Monday, you know you're supposed to fill the gap, and right? And then trade that way. Very basic gap strategy. And somebody did that. And then you could take this further and say, well, then that creates support. Okay. And this area here, as we've already marked, is really resistance. Great. So you can see, looking at this, nothing's happening except Professional bears are selling at resistance. Professional bulls are buying at support. And yet you could look at this and say, oh, it's not going anywhere. The gap strategy. Ah. Let's see. Not, One second. Just. Okay. So I went to Forex.Today. I typed in gap trade strategy, right? And I did a search, and it pulled it up. How to trade gaps in Forex. Let's see. It's not there. Huh? Interesting. All right, I'll get that for you. Okay. I can hear I'm losing my voice, huh? Almost through the webinar. I hope I sound better today than yesterday. Good. So thank you for your patience with me, guys. Take a look at some of these commodity pairs. Okay. So here's what you do. Okay. Would you agree that this zone in the center of the chart looks like it was resistance at one time? Actually, Michael, I spent the weekend on a 125-foot sailing yacht. And I was just on the water like a lot. I think and I was still worn out from being in Africa. It's not being in Africa. It was the 72 hours that I was on an airplane going to and from Africa. And then immediately the next weekend hanging out on the sailing yacht was just, I don't know, I guess it wears you down. So anyways, so with that stated of the potential resistance, again, let me go back. Okay. Bring it across. Very clearly, some sort of reversal might happen here. Right? So it comes down to when you believe it's happening. Okay? right? So the secret to success here, the secret sauce, is simply that you saw that we were at resistance. Okay? So whether you treated it like a double top, or a lower high, or a lower low, lower high, or a lower low, lower high, you know, that kind of stuff. All of that is trivial. To me, the only thing that matters is you said, this red zone up here is a place for this pair to possibly reverse. And that you were going to look and more importantly trade that type of reversal. So 2 weeks ago or last week, the double top here, the double top of a double top, right? So then you say, oh my gosh, look at this lower low of that, so therefore I hammock that, and you trade it off here, and then it's a lower low there, so now you got to trade it off of here, and this is your sell zone, and your target's down here. I mean, it's just, did you see the resistance or not? That's it. The rest is trivial babble nonsense, right? And of course, if price broke above that, then that simply puts you into the next situation. Either you, well, certainly you stop buying or stop selling Aussie dollar, but maybe you just go into that mode and just say, I was wrong here for whatever reason, but now you know what to do here. And you just move on. Now you're trading the other way. You thought it was going to reverse. More importantly, because you thought it was going to reverse in this red zone, that you were setting up sell trades that were giving you lower highs and lower lows, which is the right thing to do in a downtrend, in particular after a double top. That's just the right thing for you to be doing. And then if that stops, and it very well could be the case, so let me zoom back in here. If it suddenly does this, okay, there's lots of opportunity for you to stop selling, because we know this is our sell zone, right? Right? We know that, right? So you believe it's going to do that this week. So if you're up here, I don't know, maybe you trade the little triple top, but I'd be pretty nervous about, we had this and now it's a three-wave correction to the upside. That would make me worry, right? So right now, I would be setting up a short because, right, we had a high, lower high, a lower high. Aren't we supposed to have a lower high in here? So if I got a reversal pattern in here, then I would have permission to sell, right? Did you hear that? If I'm a bear and I'm trading lower highs and lower lows, and we get a reversal pattern up here on a smaller time frame, then I would sell. If I was a bear trading lower highs and lower lows, and I saw a reversal pattern in here, I would trade it. There's a lot into that. As simple as it is, there's a lot into that. Most importantly, I'm a bear. Okay? What does this tell me? That there's no bears, but whoever bought it in here is scaling out. So either the market's thin or the bulls are getting out. We're probably getting closer and closer to their weekly central, right? So on a 15-minute chart, this could start to look interesting, don't you think? Miles says no bears, but bulls are scaling out means consolidation and lateral movement. Well, another way of saying it is divergence. Okay. Price went up, Stokes went up. Price came down, Stokes came down. Price went up, Stokes moved sideways. So you could say it stochastic divergence on the hourly chart. But again, all of that is mumbo jumbo if you don't have this as a sell zone to begin with. Okay? The rest is just mumbo jumbo. So don't get caught up in all that nonsense. Who cares about that? Right? If you got your charts naked and just use pivots, for example, you know pivot points theory says if you're a bear, sell in here. Okay, that's a leading indicator. It's not telling you what to do, but if you're a bear, you already know what to do because that's what a bear is supposed to do. Sell somewhere between the weekly central and the M3. Now, if we were up here, this would be a problem because it's not a downtrend anymore. And why the heck are you a bear in an uptrend? You see what I mean? So you just wouldn't get any trades. Miles says, so we play the pivot. No. You make a decision. If you believe this is coming down, so how do you make a decision like that? Well, did you read the meeting minutes last week? I asked you to. What did they say? What's their outlook? What are their concerns? What's your point? What's your opinion of the Australian dollar based on logic and intelligence and research? Okay? For what reason do you define this as a sell zone? For the pivots in the trend line? Well, no. So once again, let me change the color here. Color yellow. Okay. If you trade pivot points, that's your sell zone. If you're a bear, that's it. So I'm done with that. But you already know that in advance. It's absolutely, totally basic pivot point theory. That's your sell zone. Okay? Great. But if you didn't have pivot points, what would you use? Okay? So now what's your sell zone? Right there. Okay? Pretty much the same thing. Okay? But let's say you don't even have that. But you are a bear. So all you see is this, 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 and now you say, well, somewhere around here, you expect this to happen. Pretty reasonable, right? And so now, somewhere in this zone, you see a bearish reversal pattern. Well, then I would suggest you should sell it. Okay? But what technique is right? The technique that says, I'm a bear, and somewhere in here, I believe it's going to turn bearish. And then you watch it turn bearish, and you trade it. Okay? You made a decision, and you traded that. That's a strategy. The technical analysis is pretty easy. You know, you see something like this, yeah, trade it. Okay? Right? Lower low followed by lower high. Isn't that what bears do? So all you need now is to see a lower low. So on a 15-minute chart, I want to see something like this. Right? And then here, oops, come on. Stupid drawing tool. Somewhere in there, you want to see the pattern go this way, and that's where you're short. Okay? You got it? So again, stop looking at your charts for answers. Your technical analysis only helps you pull the trigger. You're going to get a lot of false entries. You're going to fake outs and breakouts and all this kind of stuff if you're trading based on what you see. Okay? You know what you should be doing today? Setting up tomorrow's trades. Yeah, so Miles, this chart doesn't tell you what to do. If you're not a bear, then a lot of this is just nonsense and noise. Okay? If you're a bear, then now you know what you're doing. And now your technical analysis is important. Is it bearish yet? No. Okay? Are we in an area in which you would consider being a bear? Yeah. Okay. Should you trade because you see that? No. Yeah, but most people are stupid, Miles. Never forget that. Yeah. So have a plan. Because then you know when it's working and you know when it's not working. Okay. So if you're a bear, this is a higher high. If it makes a lower low, now you're ready. Because you said to yourself, as soon as it makes lower highs and lower lows, I want to sell because I'm a bear. Okay? So like I've always said, if you can't make a logical, intelligent decision, then at least flip a coin and make the decision that way. Because now if you're a bull, you're going to say, oh, well, this is support down in here. So maybe tomorrow, if I get the opportunity, I'll catch it on retracement and I'll buy it here. Okay? Okay? So whoever bought here did the right thing. Okay? But if you don't know what team you're on, how are you supposed to win the game? You're going to be, you know, competing against the Bulls and the Bears. So you're either a lion, because you lie to yourself, a lion, cheetah, lying and cheating yourself, or you're a pig and pigs get slaughtered. So I don't know. I mean, I don't know how to. I wouldn't know how to trade if I didn't know what I wanted to do. I mean, it sounds terribly frightening to me to trade without having an idea of what I wanted to do. What a horrible thing. And then, of course, this idea that you want to make a lot of money trading Forex one day, but then again, you don't know what you're doing. How's that going to work out if you just even think about it for a second? And then, I want to trade other people's money. All right, so they're going to give you money, but you don't know how to make a decision or how to have a logical, intelligent decision-making process. It just seems like unlikely. So then the only way to make a lot of money is to make lots of big bets by having, trading large lot sizes. And I think very often that leads towards failure, right? So pick the path you think makes most logical sense. Low risk and consistency because you're trading plans based on your research and analysis, or jacking up risk and leverage and gambling. Right? So, all right, guys, I'm spent, but we'll resume tomorrow. So peace on earth. May the pips be with you. May your profits be above average. And will you post a trade plan today or tomorrow? How many people promise to do something like that? Hello? Yeah, you're welcome, guys. Rick says he promises. Tom says we'll promise. Is there a good reason why you wouldn't post a trade plan? Mathilhan says yes, thank you. Richard says on holiday, we'll do it. Thank you. Still not ready to have an opinion. I'm sure you can at least flip a coin and put down some basic technical analysis. Well, you new to this? Okay. Bongs also promised. Right on. George to yours says do it. You promised last week. Right on. Well, thank you very much for your participation. I mean, the whole point of the site is to help you become a better trader. And stopping and thinking and documenting your levels of support and resistance, right, can only lead to positive things. I truly believe that. Right? Documenting your levels of support and resistance is not going to harm you. So what time horizon makes a, well, how about a trade plan for the day? So you're like, I see resistance on the 4 hour, I see resistance on the 1 hour. Therefore, on the 15-minute chart, I'm going to look for a reversal at this zone. Okay. Richard says not making big moves today. Well, the most important part of it is whether you're properly identifying support and resistance. And to me, you should be doing this as your mantra meditation in the morning as you go through and start creating trade plans, right? This should just be part of your habitual process of instead of looking for trades, you go to the pairs that you like to trade the most, and you say, all right, where's the support on the daily? Where's the support on the 4 hour? What does the 1 hour look like in the Stokes on that? Are they congruent for the support? And then on the 15-minute chart, what kind of patterns would you be looking for today and why? See what I mean? Whether it happens or not, to me, is irrelevant. Whether you're right or wrong, to me, is irrelevant. But if you're a bull and you're looking for 2 or 3 levels of support for the morning, and then know where you would buy if you get reversal patterns on smaller time frames, like the 5 and the 15, then I think on the long run you will be successful. You get it? Because that's the type of work that you do over and over and over and over and over again. You buy at support and you sell at resistance. So, all right, guys, I'm losing my losing my voice. So, I'll see you tomorrow. Thank you for being on my team. I appreciate it.